In this video, we're going to take a couple of minutes to discuss rising interest rates. The Bank of Canada just raised them the other day, and a lot of people out there seem to think that this is going to have a great impact on the real estate industry and mortgages. Sheldon, please enlighten us.
Well, it's a good thing they're not our parents, right? Our parents were kicking mortgages butt at 15 and 18% interest rates.
That's right.
So, you know, it's all about perspective. So the first thing I'll say is there's a million different interest rates out there, loan to value, credit score. There's a lot of things that come into play with interest rates. But interest rates are historically low. And yes, they just went up by 0.25% at the Bank of Canada, and you know, it scares people a little bit, but they're still historically low. They're not going to be undesirable for probably any time in the next 3 or 4 years. Of course, anything can happen in the economy, so don't quote me on that. I'm not with JoJo Psychic Alliance.
We don't have a crystal ball here.
No.
Yeah.
However, I will also mention that with interest rates, there's a habit that people have of they kind of just assume what everybody does, which is the 5-year fixed. And again, financial advice should be tailored to an individual. You want to have a good conversation. Make sure that mortgage broker or mortgage specialist that you're working with is asking you good questions. You want to be able to trust them in their heart, but you also want to be able to trust their intelligence, that they're asking you questions to understand your unique situation, because there's no one mortgage that's the right fit for anyone. Historically, variable rates have been better for people. And if you think about it this way, Adam, people can have, let's say, an interest rate of 2% on a variable, and they hear interest rates are going up by 0.25%. They're like, oh no, I got to lock in. If you lock in, you're probably locking in at 0.25% or more of what your current rate is anyway. So if you can afford the 0.25% increase, I wouldn't necessarily run to lock in. Again, all situations are different, but you want to have a conversation with somebody that understands finance. Ask them some questions, make sure they're asking you some good questions to determine what really makes sense for you. So don't default to one kind, and don't let the current interest rate increases that you hear on the television with the Bank of Canada scare you. We're still in a very, very comfortable place, and now is the time to get in, because the only place they can go is up. Hopefully they won't go up too quickly, but why not get in while you can lock that rate in?
Yeah.
Or again, if you have other plans and the variable makes sense, still those rates are fantastic right now.
Yeah. You hire somebody like this guy. He knows what he's talking about.
And you don't even have to hire me. The way it works with a mortgage broker is we can shop over 40 lenders for you right across the country, including your own bank.
Yep.
But your institution pays us a flat referral based on your size of your mortgage. So there's, in most cases, for a conventional mortgage, you're not going to be paying your mortgage broker any fees. Now, if you have a really difficult or sensitive situation, bad credit, sometimes there's a tiny extra fee that's attached. But best way to find out if that applies is to just give me a quick call, 24 hours a day, 902-440-2663. Sheldon Bro, I will wake up with a smile and take your call.
Specifically at 3 a.m. 3 a.m. in the morning.
It's a hot time for me.
Yeah. Thanks for joining us today, Sheldon.
Pleasure.
Sheldon Bro from Gemma Finance, AdamScott from HaliPad Real Estate. Again, there's somewhere on this screen that you need to hit subscribe, and stay tuned for some more really great content coming from us here at HaliPad.
Can we put that subscribe button right here?
We sure can. I'm going to get sunglasses made up.
Hey, you put them on again and it says subscribe.